Good morning, everybody. Happy Friday. It's March 1st, 5:27 a.m. Central Time. Grain markets are mixed this morning. Brian Split is with us. Mackenzie with us as always. Let's start off with this corn rally.
So, corn futures have closed higher for 4 consecutive days. The most heavily traded May 24 contract bottomed near 409 a bushel on Monday prior to peaking at 432 a bushel on Thursday. Hedge pressure has likely eased now that March basis contracts have either been priced or rolled. Some chatter regarding Chinese corn purchases out of the U.S. PNW circulated on Thursday. Fund traders were estimated to hold a net short of 330,000 contracts at yesterday's close.
The basis contract thing, Brian, I believe is a fact. There's less hedge pressure now than there was 3 or 4 days ago when this stuff was being priced or rolled. The China thing, maybe. I don't know. Have you heard anything?
Same thing, a little bit of rumors, but I haven't heard anything confirmed. But that's something that the guys at JSA have been talking about internally, is just the talk of that happening out of the PNW. But you're right. I mean, there's a period of time, and it could be, leading up into first notice day. I think people are a lot more aware of the dynamic right now because we're talking about it so much, and we saw what happened at the expiration of the December contract. But now we're at the point where that seller that had to sell is no longer there. They no longer have to sell, and they don't have to sell again until you get to the period of the first notice day for the May contract. So you got about 2 months until we have to see selling. So now selling won't come in here from the producer side of things until we either get to a price that they want to sell or feel like they should sell, or we're right back at to delivery again.
You've still got obstacles like interest rates and storage costs, but you're not really up against a clock like you were, like a lot of farmers were just a few days ago. If the China thing is confirmed, if you do see a flash sale today or Monday, that would not be surprising to me. And very often the markets will move in advance of those flash sales being reported. So if you see a flash sale reported and the market doesn't rally on it, I wouldn't be shocked by that because the commercials who do initiate this business, they're aware that this stuff is going on. But the market looks good. What does this chart look like to you, Brian? I know you're a chart guy.
Yeah.
Is
So
that a bottom? I mean, we had a big reversal.
this is what I'm watching for today. I think today is really important to confirm that we made a low. So if you look back to the bar from Monday, and we made a new low for the move, then we took out the previous day's highs. We closed just a hair under Friday's highs. But what I'm looking at is the high that was made last week was 434. And so if we do see continued strength today, we push through 434 on the May contract. That would be a weekly reversal if we get through last week's highs. I think that would go a long way towards confirming that we've made a low.
Yeah. Okay. Well, we'll see if we can do that. That's tells you how crappy the market's been. We've had this 4-day rally and we're not even back to last week's highs, which be nice to see, but we're not quite there. All right, let's get back to some bad news, which is what we've been doing a lot of lately.
So, U.S. soybean export sales were poor again last week. Net soybean sales of 6 million bushels were up noticeably from the previous week, but down 30% from the prior 4-week average. China was the largest buyer for the week. Again, unknown destinations canceled a large volume of previous soybean sales, previous soybean purchases. Net corn sales of 43 million bushels were up 32% from the previous week, but down 5% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net wheat sales were reported at 12 million bushels, up 40% from the previous week and up 2% from the prior 4-week average. Japan was the largest wheat buyer for the week.
As it relates to soybean sales, this is at least the second week in a row you've seen cancellations, unknown destinations canceling a whole bunch of beans and offsetting a lot of the new sales. This is a seasonal look at soybean export sales accumulated. So we've now got, it's either the second or third worst book of sales of the last 10 years. And what's going to start happening, it's already happening, is that the U.S. export window is getting smaller and smaller and smaller because the Brazilian crop gets bigger and bigger and bigger. I think USDA might need to cut its export projection again.
Seems like it. When you think about what we need to sell every week in order to hit the current USDA goal or target for export sales for the marketing year, we're running short of that number. I think, yesterday was maybe short by 4 or 5 million bushels, but nonetheless, we are not currently running at the pace of sales that we need to see to hit USDA's goals.
And a lot of the pace analysis stuff that people use, like based on historical averages, it's changing in real time because Brazil is getting so much bigger in real time. So the soybean export thing is a problem. The numbers floating around are that, U.S. soybeans landed in China are $1.50 more expensive than Brazilian soybeans landed in China, and that's why maybe that's China canceling business. I don't know, but it's not a good look.
U.S. ethanol production and consumption rose last year. According to the Energy Information Administration, U.S. ethanol production and consumption rose almost 2% in 2023 to their highest levels since 2019. The blend rate, also known as the national average ethanol content of gasoline, rose to a record 10.39%. Each month last year, the blend rate exceeded 10%. This was due to an increase in filling stations offering E15. The growing popularity of E85 sales also contributed to the record blend rate. E85 sales reached an all-time high last year, mainly because of California's low carbon fuel standard.
Say what you want about California, but they're at least helping us out in this respect.
They are. There are a couple of things about corn and ethanol. I would like to think that ethanol will continue to be a very bright spot for corn demand. Number one, the price of corn plus the price of natural gas gives the ethanol plant very cheap inputs. And then when you look at the output, ethanol back in October was at a 15-cent discount to unleaded gasoline. And now it's over $1.15 discount to unleaded gasoline. So we've seen unleaded gain over $1 on ethanol values in the last 4 months, and I think that'll continue to help the blend.
Sustainable aviation fuel is going to be the future, guys. I'll do a quick plug this morning. Pete Meyer was on yesterday, and the video we did was titled "Do Not Be Left Behind: SAF Best Practices." There are steps that you absolutely need to be taking as a farmer to prepare for this transition. Pete went into this in great detail. If you guys want to see that video, sign up for the premium deal this morning.
USDA released weekly drought monitor data yesterday. Temperatures across the majority of the Corn Belt were well above normal last week. The area received very minimal precipitation. Drought conditions worsened in Missouri, Illinois, Wisconsin, Michigan, Iowa, and Minnesota. Temperatures across the High Plains were also above average last week, and the area received minimal precipitation. Drought conditions were mostly unchanged for the week across the High Plains, except for conditions worsening up in North Dakota. When we look at the percentage of U.S. areas experiencing drought, corn country 30%, soybeans 28%, winter wheat 14%, spring wheat 29%, and cattle country 16%.
If the market cared about one thing right now, it might be the winter wheat number, but the winter wheat number is really low. Only 14% of winter wheat areas experiencing drought. I think there's a lot of concern already in Iowa in particular. I've had a lot of questions already about forward marketing. Joe, I'm scared to forward sell corn or soybeans because of this drought that we have. Are you hearing anything similar, Brian?
Yeah, I mean, especially guys in Iowa that it's just really dry there. We've seen expansion. Minnesota had a really dry beginning to their growing season last year. Rain came in really late in the season, and so now we're looking at the drought expansion there. So it does make people concerned, especially with prices at lower values than we were talking about several months ago. Selling corn at $5.15 for new crop is a little bit more palatable when you're dry than coming in and selling it at $4.50 to $4.60.
The market absolutely does not care about this right now. The row crop markets don't. I know that farmers do. If it continues dry into the spring, that would, result in a quick planting pace. And then if it's still dry come, say, May or June, the market will really take notice. River levels are, above normal now, slated to decline, and have not been a problem as of late. We haven't had this chart on here forever, so I figured I'd throw it up this morning, but not restrictive at this point.
According to Russia's agriculture minister, Russia has no plans to revive the Black Sea grain deal since the country is able to export its own grain. Meanwhile, Ukraine is concerned that if its allies don't boost the ammunition supply, Russia will be able to make major advances by summer. Russia still has the goal of seizing major Ukrainian cities such as Kiev and Odessa. If Russian troops are able to make it to Odessa and overtake the city, they will be able to cut off Ukraine's grain export routes through the Black Sea. Ukraine is hoping to hold the front line until the second half of the year, when there is a chance it may get F-16 fighter jets and increased ammunition supplies.
So talking about the possibility of Russia cutting off the grain export routes. I'm not sure that that's really the intention, though. I don't know.
No, I don't think that that's that may be a consequence of what their bigger picture intentions are, but I see the war right now as bearish. I think it's transitioned from a bullish mindset to a bearish mindset, and so I'll explain. Initially the concern was, well, Ukraine is not going to be able to grow any crop. They're in a war. They're not going to export anything. And then we found that out to not be the case. And they, have been able to see quite a bit of their product leave the country. Production, yes, it is lower than it was pre-war. But now the dynamic has become Russia is offering wheat at discount levels to continue to finance their war efforts.
Huge discounts.
Ukraine is also offering product at big discounts, and we're helping them do that by sending them taxpayer dollars. And so, in my mind, when the war ends, whenever that is, now Russia no longer has that incentive to offer their wheat at a discount to pay for the war because they don't need to pay for it anymore. And taxpayer dollars are not going to be going into Ukraine anymore to help them offer at lower values. And so we're going to see just a general rising tide lift all boats, because those entities out there that are offering at steep discounts for reasons other than to get grain to just sell into the world market to finance their economy, they have incentive right now to sell it at a discount and move as much as they can.
Farming in the U.S. is kind of tough right now, given the financial situation. It could be worse, though. You could be drafted to go fight Putin on the front lines, as Ukraine is doing. So, count your blessings, I suppose, guys. That's what Bloomberg was reporting this morning. I think it's going to be mostly like younger farm workers is kind of what this article suggested, but pretty scary stuff.
The U.S. Space Command has reported that China is rapidly increasing its military capabilities in space. The expansion will counter American satellites and allow China to better watch and target other nations. It's believed that some of China's satellites may be able to function as weapons and disrupt the orbit of U.S. assets. Since 2018, China's satellite fleet has tripled to 359 systems. China is expected to be the world's second most active space launcher this year, only behind Elon Musk's SpaceX program.
Wasn't there like an identical story almost about Russia just like a couple weeks ago?
Yeah.
So there's like some sort of space war going on.
I think that was shortly after the interview that Tucker Carlson did with Vladimir Putin, and he suggested that they have these missiles that have some extreme capabilities higher than what the U.S. has. And I don't know if that's really the case, but maybe that's just enough for him to go out and say that. But good thing we have a Space Force, right?
Yeah. Hey, in some instances, we talk a lot about China's economic problems. In some instances, war can be really good for the economy, depending on the situation. And we still get questions all the time. What happens if China invades Taiwan? What happens if China invades Taiwan? I don't know. Have you heard anything about that, Brian? What is your opinion?
What happens, or are they going to?
If they do, it's bearish the markets would be my my thought. But just generally speaking,
I think whether it's bullish or bearish, at least immediately, will have to do with the context of how money is positioned in each market. So, for example, there's a lot of short position in the grains right now. And I think when there's a major event that happens, the initial reaction of the money managers to exit positions and get to cash and know where they are, and then implement strategy from there. And so I think at least the initial reaction, if there was a major world event, whatever it might be, the fund manager may want to get flat positions unless they have a very strong opinion that whatever the outcome is going to be is already in the position that they're in. But I think you could actually see a world event, whatever it might be friendly to the grains in the context of today's market, because they are so short, and they may want to exit those positions before saying, all right, this is how we're going to deploy money moving forward.
I agree and I disagree. I agree from the technical standpoint, the way that money is positioned, but I also have a tough time believing that anybody's going to want to buy soybeans when we're at war with the world's largest buyer. It's tricky, and hopefully we don't get to that. We don't have to worry about it. I don't know.
Inflation continues to ease, according to the Fed's preferred inflation gauge. The Personal Consumption Expenditures Price Index increased by 0.3% in January compared to the previous month. On a yearly basis, PCE rose 2.4%, the smallest yearly increase since February 2021. Both figures were in line with pre-report estimates. Personal income during January rose 1%, well above the forecasted 0.3%. Consumer spending decreased by 0.1%, down from the estimate of a 0.2% gain. Fed officials are expected to cut rates sometime this year. However, the timing is unknown due to recent inflation data coming in hotter than expected.
So you're not quite down to the Fed's target, but you're getting there. This thing, the whole thing about excluding food and energy doesn't necessarily make sense to me, since those, in terms of like a personal budget for a family in the United States, those are some pretty big line items. So I don't know how you can say that. It's just the whole concept of that never made a ton of sense to me.
I agree. I mean, it's like you take out the two most convenient parts of inflation to make it look better, is the way it feels and the way it sounds. But every person needs food to eat. We need energy to keep homes warm. We need energy to go to work. And these are very integral parts of our just day-to-day existence. So to say that we're going to take those out because they move dramatically, well, I think those are the two most important categories, if you ask me.
The odds of a Fed rate cut have been kicked back. We're now talking only a 5% chance of a cut in March, 28% chance in May. It's most likely at this point that you see your first cut in June, 72% chance of a June Fed rate cut. What did Cal do yesterday?
They were down again on Thursday. Feeders closed an average of 93 cents lower. Live cattle closed an average of 60 cents lower. Box beef continues to climb higher. Choice ended the day at 304.20. That was up $1.17. Select ended the day at 294.18. That was up $1.24.
Any thoughts on cattle, Brian?
April's having a really hard time on the live side, getting through this 189 area. If you think back to October, we had gapped lower from there. We came back. We couldn't fill the gap. We stalled out there, made that next leg lower. Now we're revisiting 189. I think put values are cheap. We need to hold 182 on a chart. That was our last little pivot low. That's about where the uptrend comes in. So if people want to be bullish, and I understand the fundamentals are still on the friendly side, I do think that with put premiums where they are, it does make sense to have a floor under the market. And we don't want to relive what happened from September to December again, now that we're back up at these levels.
Yeah. Outside markets on Friday, U.S. dollars off a little bit. Stocks are off a little bit. Bonds up just fractionally. Crude oil's up $1.22 in the May WTI at 78.67. Have a great weekend, guys. We'll talk to you on Monday.